Because in the banks, we're professional traders. We're paid to turn up and trade for, 7 hours, 8 hours, 10 hours a day. That's what we're paid for. As a local on the floor, it's your choice. Do you want to go in there and make your money at the open? If you do, most guys on the floor that were successful finished up after the first hour or so. After that first hour's out the way, 2:30 London to 3:30 London, after that first hour's out the way, most professional traders, the floor traders, would simply walk away at that stage and say, well, that's where most of the money's been made, so if I'm not going to get the best return for my time by sticking around here, so they just head off into the golf course. And I suppose it is a personal choice, but in a bank desk, you don't choose to finish off because you've hit some sort of target. One of the ways you can approach it, however, if you use targets, is to try and achieve a target, and then after that, to try and do smaller size positions on a scalp basis, or practice some ideas on a scalp basis. So when you hit a certain target price, you say, right, I've made enough of real money today. Now I'm going to try and practice a few other ideas and techniques to see if I can improve on those trades, debrief the trades themselves, make sure everything was right when you took the trades in the first place. But it really is a personal question. It's not something that a bank desk trader like myself would ever have an answer for, because I haven't got a clue. I haven't got a clue what the best management strategy is for anybody in that sense. It's a choice that you make yourself as to how much time you've got available, and whatever the answer is your answer. You can always change it, remember. You can always change it. But like Kim said, one of the challenges you've got with having a certain target each day is that you might leave an awful lot of great opportunities on the table, because sometimes when the market moves, like RGLs, for example, when the market moves, you want to stick with the trade. And you might hit your target at 500 and say, right, that's me, I'm finished, $500. But the move keeps going for 1,000, 2,000, 3,000, 4,000, 5,000, and then you're going to be really, really resentful of the fact in some cases that you could have made $5,000 and you've ended up walking away with 500, and you think, well, I'm an idiot. And so instead of having a positive outcome from that, you end up having a negative outcome from it in terms of your psychology. And there's some days, Catherine, that the market just doesn't give you any clean shots, and if you've got a target to try and hit and you have not got any clean shots and you're running out of time, you might end up taking trades that simply should never be taken in the first place, because you feel like you need to do something to hit that target. And that's also the problem you can have, is that you're doing things that, the target should be dictated by the market. You know what I mean? If the market's going to give you a lot of money, you take a lot of money. If the market's going to give you next to nothing, you take next to nothing. You're willing to do whatever the market gives you. So if you're in a buy trade on gold and the market's really tight, you might take 5 ticks or 10 ticks. If the gold is very volatile, you'll feel as if you're a little bit cheated with 5 or 10 ticks, but it's a responsive outcome based on the volatility that you're experiencing with the markets. And when we were trading oil, for example, some of these swings were $1,000 swings. I'd be cheated if I never got a $1,000 swing in these oil markets some of these times. But the oil's starting to calm down a little bit. It's still very, very volatile. But you can see that top sell, that top line sell. Look at that, guys. Top tick sell, $98 has just traded $96.40. That's a $1,600 sell-off a Baltic indicator, for God's sake. So you can see that it's off a Baltic indicator. You've just made $1,600 off of one single indicator. It's crazy, isn't it? But obviously, if I was in a tight oil market, I might try and make 10 ticks. But in this kind of oil market, I can see the previous swing low was down here at $97. I'm thinking to myself, if we go for a bracket move, I could achieve $96. I could achieve $96. It's a $2,000 potential sell-off. But that's not normal. It's obviously significantly linked to what's happening in Ukraine, for example, and blah, blah, blah. So we obviously just adjust our expectations, if you like, into that type of narrative, right? So it really is. To me, it's market-led, but it doesn't have to be to you. That's a choice you make. But to me, it's market-led, and I try and adjust what I want to see based specifically on the market itself. And if the market gives me big trades, the market gives me big trades. If it doesn't, I just adjust my target prices down significantly and adjust according to what I am trading. We just adjust to 5 or 10 ticks type scalp trades. So you have to be flexible, I think, is the best answer, but that's not the best answer for you. If you rather go for specific targets and it's the way you live your life, you like hitting targets, it means a lot to you, then of course change it. You know, it's whatever's best for you is the answer to the question. And if you're not liking the answer that you're getting, change the question.